Kitco News special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.
Hey everyone, welcome back to Kitco News. I'm Jeremy Szafron. Joining us today from the Vancouver Resource Investment Conference, day 2, I should say, is a man that you should know. We're going to talk to you exclusively about gold here. Cam Currie with Canaccord. Thanks for being on the show.
Thank you so much for having me. Appreciate it.
Cam, you've been around a long time, and this brings me to my first messaging here is because we've been talking a little bit off camera about the retail audience coming to the market for gold junior miners. There's been a little bit of a lack thereof recently with buying, so I'm curious with the evaluations of a lot of these junior mining companies at where they are, why are they staying clear?
Well, it's just not the juniors; it's the sector overall. And we've been talking about this with our clients and messaging a lot of interviews I do, is that the investor of today has left the sector. They in the past they chased other sectors like cannabis, crypto, digital. They went shopping in the United States. Most investors now go through wealth management investors. They buy ETFs. So stock pickers of today are not as big as they were in the past. Canada traditionally has had a very big mining investment culture, and we're mining capital of the world. And you look at the money flows from the big corporate pension funds and that into the resource space, it's gone down since 2001, 2002.
So was it just COVID then when we saw a little bit of a top of the market when this outflow started to take place and we haven't seen anyone enter back in? When was the timeline here?
Well, 2020 when COVID hit, then of course everyone looked for insurance policy, and that's where gold had its rally. Gold still is trading near its all-time highs, but the old gold equities have sold off since 2020. Because again, the money flows have never come into the equities. Gold is an Eastern story right now. It's not a Western story. Western gold ETFs in the last 18 months have gone from 3,700 tons down to 2,600 tons. And yet last year, for example, in China, the second best performing asset class for investors was gold, up 13%. So gold is in desire in the eastern parts of the world, but the Western world is now chasing the Nvidias and the cycle that they made all the money in the last cycle.
So is it just news flow? Is it a lack of due diligence? I mean, you're talking about Chinese buyers, obviously on the investor side, really coming into the market strong. This East versus West, do they know something we don't know?
Well, again, it's the discussions come up many times about de-dollarization. And what you have is, transactions in US dollar 20 years ago represented 60% of transactions, now they're 40%. And so the US dollar people have been moving into US dollars, and the gold ownership continues. Because most people don't know this, but gold is one of the top 3 reserve currencies in the world. And so you look at the euro, US dollar, and gold. And the thing about gold is it's the only one that has no debt obligation, no printing press, or political attachment. Now, I know that seems to be the standard name for why people own Bitcoin these days. And that's the new kid in the block investment. And the narrative is flowing so much into that direction. We have no narrative in our space in the Western world at all.
Do you think that they're building it up, though? I mean, the excitement on these floors right now, it seems like people are really understanding that there's an opportunity here with these low stock prices to enter into the market and really do well.
Well, the values, you look at the P to NAVs on these companies, and you mentioned the junior companies. You can look at some of the developers, the mid-tiers. I mean, we've never seen this cheap and in such great financial position. I mean, now look at B2, for example, pays you a 5.5% dividend yield, and they're debt-free. And so, you've never seen that in the past, right?
So how do you advise clients then, where to put their money, but also how do you educate them that this would be a good choice for them to invest their money into?
Well, I guess you go back in time, and I remember being back in 2002, 2003 when gold was making its move out of $350, $400 an ounce, yet everyone was buying the dips on the tech bubble that fell apart, and they had a rally back 40%. And I think that's what we're seeing right now in US equities. And so, again, I think we're in that situation right now where gold's at 2,000, the US dollar is going to, I think, roll over here, and the recession will become recession in 2024. Debt will become a topic. And so I'm telling people, you got to buy when nobody else is. And I think it's really important is the people inside the industry, the guys I've worked with all these years, they're all buying stock. And they're saying, I've never seen the valuations this cheap before. So when the insiders of the industry are big buyers of the stock, pay attention, right?
You recall, obviously in December, we saw that record price of gold. When we look towards this year, 2024, in the forecast, you're calling for a recession. Some are saying This is the year of gold. This is the year of the breakout price. Where do you stand with those two?
Well, first of all, recession. I mean, the data points are you can look at the data points. I mean, we talked about the employment numbers, but last year, last 9 months, 8 of the last 9 times they've revised them downwards. So unemployment is going up, and you can't tell me when you get rid of a high-paying job at Google and you get someone working at Starbucks that they're the same paying job.
Right.
So the data is not representing the real position of the consumer. The consumer is getting more and more stretched. The United States, what they have for them is they have a 25-year, 2.5% mortgage.
Yeah.
And so that's why they've been able to weather themselves longer. And but you're seeing the consumer tightening up. I mean, you look at services like Affirm, buy now, pay later. Sales up 40% at Christmas time in the United States. So people are buying staples, like at Walmart, they're using Affirm to buy staples, and they're buy now, pay later. Is that a strong consumer?
Yeah.
So I think the lag effect on this recession, I mean, the leading economic indicators now have been 20 months in low of decline. Unemployment's going up, and you're feeling a tightness. And there's a lag effect. I think when it becomes, that's when interest rates will come down, dollar will weaken. And the big thing is that you have a $2 trillion deficit in the United States last year when you had full employment, record low unemployment. Never in the history have they had an economic situation like that where they printed a $2 trillion increase in deficit. What happens when weakness happens?
Right.
Your deficit goes up. And interest rates are where they are. The cost of financing this debt is going to put downward pressure on the US dollar. And gold, I think, as a reserve currency, will get much more limelight.
Yeah, it's interesting. We had a couple speakers on stage this morning talking about how expensive it is to raise capital right now for a lot of miners, but also how expensive it costs to actually have a really good asset. So break those two down and how important a team is to really bring this together and where you think the value add is for some of these stocks.
Well, and that's one of the problems with the industry too. We've had a number of disappointments.
Right.
You know, execution's been poor. We have gold at 2,000. People are going, well, how come these stocks aren't doing better? Well, when you have some of the leading companies lowering production and increasing costs, there's margin squeeze, right? And so the management of some of these assets has not been that well handled.
Right.
And so what I do is I have my whole Canaccord mining team. I have probably 40 clients who are geos engineers. I do a lot of principal business. I get close to people who are the builders of these companies. And one of the things that is very, very important is with the insiders. If insiders are buying stock and they have a big stake in these companies, that's alignment.
Yeah.
And I have a track record of working with management teams that have sold 2 or 3 companies in the past. Last cycle, we sold 8 companies to mid-tiers and seniors. So I've been through this before. And so I've seen markets where there's a void. You know it's going to change. I remember back in 2001, I was referred to as a dinosaur.
Right.
And I looked at that, and actually that inspired me to work even harder because I went out to investors and said, I know this sounds unorthodox. Everyone's talking about Nortel, but I'm here to talk about gold.
Right.
And I don't mind being called a dinosaur because it just tells me nobody's paying attention.
Right.
And I learned a long, long, long time ago that sometimes opportunities come along that are so low risk, so high reward, and no one's paying attention. And I think with what's going on in the US equity markets again, people talk about some of these gains that have been taking place, but they don't mention that, Coinbase, for example, which hit $120 a share, lower bottom out at $440, it was $325 a share. They don't talk about where it was back then.
Right.
They just talk about these incredible gains in the last 12 months. But don't forget where some of these companies came from. And yet gold's at all-time highs and no one's paying attention.
Right. Well, that comes, so in this meme stock type of atmosphere where you just have news flow, do you find that everyone's just buying the news and selling the rumor? Or is it, there's a lot of inflow of capital going into whatever is trendy now.
Yes.
But for long-term investments, this is more advisable.
Oh, totally. Because, chasing narrative, I remember walking into an appointment I had and the guy who was hosting the apartment said, yeah, I just bought Zoom. And I said, what'd you pay for it? Oh, $500. I said, $500 a share for that. Do you know the fundamentals of the company? No, but I use the product, right? And I said, but that's the herd mentality.
Yeah.
And so you have this massive herd mentality. But what's happening now is that herd mentality is going into the ETFs. And so you look at something like an Apple. Apple's 7 quarters in a row of declining sales, and it still has a $3 trillion market cap because it has so much spray into these ETFs. And I think, an example that Canadians can relate to, look what happened in the cannabis space, right? So you had all these cannabis stocks go stupid because of all this ETF flow.
Yeah.
Now, do you think the ETF buyers of cannabis stocks in the United States knew they were buying Tilray at $260 a share, now at $2, right? And so that's the thing. the narrative is so important. And I've said this many, many times. I mean, we're in a stadium of 60,000 people, and there's a match going on down on the field, and Tesla's there, Nvidia's there, Apple's there, Microsoft's there, and everyone's lined up to try to get into the stadium. And in the gold sector, we're 10 people in the nosebleed section trying to get the wave going.
Right.
No one's even paying attention to us. So, I guess, when no one's paying attention, there's great value to be bought. That's when you buy.
Right.
Because eventually someone's going to turn their head and pay attention.
Interesting. Let's get into the cost of capital for a lot of these guys
Yeah.
trying to raise capital now. Do you think that the lack thereof will bring in a big M&A type of boom in here where you could see some of this consolidation take place?
M&A has to be done for the right reasons.
Right.
And John Goodman and I were on a panel once, and we were talking about a lot of our companies are trading at 0.2 times NAV. We don't want the M&A happening now because you get a mid-tier or senior trading at 1 times NAV or 8.8 times NAV. We don't want to forfeit these companies too early. A recent M&A that just took place that I'm very, very involved with is Caliber's takeover of Marathon.
Mm-hmm.
Now, we embrace that because that's a 1 + 1 = 5. You've got a 280,000 ounce producer, company with $110 million debt free, buying a company that was void of some capital in construction. It made sense for both parties to come together. The re-rate is going to be a creation of a 500,000 ounce producer, which is a mid-tier. And the mid-tier rating on this should have a significant impact. The deal closes end of this week.
Interesting.
But that makes sense. But some of these other ones, I mean, you get some of these companies that are undercapitalized and they can't raise money and they get taken over. It's unfortunate.
It's terrible here. I mean, it's for pennies.
Yes.
Right?
Yes. Yeah.
Talk to me a little bit about what some of the issues are with the gold market this year that you are anticipating. I mean, you're quite bullish on the precious metal space. Let's talk about 2024, your forecast for gold, silver.
Well, I don't put a price on anything. I think it's going higher.
Good.
I think the shift is going to take place. I think the narrative will start questioning the equity values in the United States and the recession.
Right.
And as the recession, U.S. dollar weakness happens, I mean, we have a shift taking place. We have, I call it the autocracies versus democracies in the world. And there's a move to de-dollarize. And I think that move is going to continue. And I think the U.S. dollar is going to continue to weaken. So if the dollar is weakening, what currency are one of them?
It's not just a trend. Things like
No.
BRICS, everything's kind of showing that this isn't going anywhere.
You know, and the thing about it is too, when you look at the weakness in the dollar, gold's at all-time highs in all other currencies except for the U.S. dollar. When the U.S. dollar weakens, gold will start breaking out in U.S. dollars. If you're in Turkey, for example, if you own U.S. dollars in Turkey, U.S. debt in Turkey, you got destroyed in the last 2 years. If you own gold, gold went up by 300%. So they've seen the value of it when your currency declines. The North American investor isn't even looking at that right now because they don't think that's even in the cards right now. And I think when people aren't looking at things and the rest of the world is observing something, pay attention to that. And I think, from the equity side, most people don't know this, but the entire gold equity sector globally, the market cap is less than Home Depot. So when you talk about the cannabis ETF spraying into cannabis stocks, when the ETFs start spraying into the gold equities and that, it doesn't take a lot of money to move into these things.
Yeah, no kidding.
And, the weighting in the United States is 0.25% of funds is in gold. And you got guys like Ray Dalio saying, if you don't know gold, you don't know the history of fiat currency. You have guys like Stanley Druckenmiller talking about buying gold because of the US dollar weakness. And yet the weighting is at 0.25%. Right. So if we're wrong, no one's paying attention. If we're right, and it goes from 0.25% to 1%, what's the impact going to be on these equities?
Well, and how much of that market is kind of held up? I mean, we're coming into an election year in the United States. No one wants a bad economy coming into that.
Yeah.
How much of it is just narrative based and this bubble is just keeps growing?
Well, narrative is everything these days, unfortunately. Narrative, we all have our phones glued to our hips, and so we're constantly bombarded by narrative. And the financial media narrative, everyone follows suit, right? And so narrative is everything. And but narrative is driving people to a fault now, because I think people are living way beyond their means, because they feel that they can just keep on consuming, despite the worries that people keep on talking about. And so I think the narrative is going to shift here in the next 12 months. Election, we're going to obviously see a very interesting situation in the States, but there's 40% of the world is going through election this year. There's a lot of changes taking place. we'd probably need that here in Canada.
Yeah, well, I mean, with any luck, I'm not allowed to say anything. Outside of that, what I would like to talk about a little bit more, just before you go, is copper. Let's talk about copper this year. I mean, it's obviously a huge precious metal. We're seeing a lot of news flow about it, some supply and demand issues. We can get into the Red Sea, if you will, but where's copper going now, and where do you think this is going to stand for this year?
Well, first of all, I love copper.
Yeah.
I think copper long-term is a phenomenal play. Because again, if you look around this room, everything involves copper, right? And most people don't realize that the electrification of the world requires copper. What makes it interesting for copper these days is the supply side. There's no new projects coming down the pipeline. The Lundin Group just held a tour down at Vancouver district, which is this Filo, Jose Maria, NGX, and it's the biggest new copper discovery on the planet, and it'll be how many years until it's in production? Whereas you look at the mines in Chile and they were mining it, at 1% copper, now they're 0.25% copper.
Yeah.
So supply is a huge problem. I still think we have a recessionary call that's going to keep copper in this range for a period of time. But if it gets down to 3.25, you'll get spot coming off.
Correct.
But you're not getting anything built. Freeport was saying that they got to see $5 copper before they start committing, and we're at $3.75 right now.
Yeah.
So I think one of the swing votes is if China starts stimulating, but they have a massive overhang of inventory of real estate and infrastructure build out. I don't know if they need to do that or can do that at this point.
Yeah.
So long term, copper, there's no copper projects coming down the pipeline. The other thing too with copper is that a lot of the copper supply flows go to China, right? They have such a finger in Africa, South America now. And what's going to have to shift too is in North America, we have to start permitting these copper projects, because copper price can be at $4 or $5, but if you can't get the physical, what good is it, right?
Do you think there's a disconnect between the investor and the actual community, the buyers that are not realizing that a lot of these projects, they're just brand new? I mean, they're not licensed, they're not permitted. How long this is actually going to take to see some effects in the marketplace?
On the supply side or?
On the investor side.
Investor side. I think, investors are driven by greed and fear or boredom, right? And nowadays, the investor is looking for instant gratification. I think once we get a narrative of critical mass, and I'll give an example, uranium. 2 years ago it was a dirty word, right? Now it's a green ESG word, and you look at where uranium just went through $100 a pound. Chemical 2 years ago was left for dead $12 a share. Now it's $65 a share. So the sentiment changed and things shifted. I think the sentiment, when it shifts in what we're doing, the rewards are so big. You just have to be patient. I think that's one of the big things. You have to buy these stocks and just stick them away. As long as the check and balance of what's being delivered by management on the asset. We have to look for management teams and assets that have growth trajectories, right? And we aren't playing in the junior exploration play right now because, if someone discovers something, they have to raise money. I got involved with Vizsla Silver, for example. They had the discovery hole 3.5 years ago. I didn't really get involved until 6 months afterwards, when they had 6 rigs turning and the Napoleon vein was actually turning into something meaningful. And I went, wait a second. So then I spent a lot of time with management, and now they just came up with a new resource, 330 million ounces. They've done that in 3 years, and they've looked at 15% of the district. I mean, there's an exciting story.
Yeah, no kidding.
But again, the stock's down 40% from its high, and yet the asset's gotten better and better, because nobody's paying attention and there's no money flows.
So looking at that, I know you don't want to give specific stock tips, obviously, but looking at the future, where you put your money in 2024, what would you advise?
Well,
any specifics?
I have a select group of seniors, intermediates, but my real love is the developers and the mid-tiers in the making. The Caliber Marathon merger, for example, that just makes economic sense. Yeah. I mean,
game changer too.
Well, Caliber, before the takeover, they had 110 million in the bank, debt-free. They go up from 60 to 285,000 ounce production, and they were trading at 5 times PE multiple. And now they're using their cash to deploy to grow an asset, which was one of our favorite assets in a jurisdiction that's safe, the Maritimes, Newfoundland specifically, and they're going to unlock the value. And the management team has done this time and time again. So it's not like they're doing a one-off. They've done their due diligence on this. They know what they're doing. They're capitalized, and they don't have to go to the equity markets.
Yeah.
If you're at the whim of the equity markets right now, that could be a challenge. You can have a great asset under development, but because the share performance has been so poor because no one's paying attention, especially the juniors, because there's no money flows from indexing.
Correct.
You look at, like, I remember talking to one of the mid-tiers, and they told me that their stock jumped 30% in 3 weeks because 2 index funds came into the United States. Nothing fundamentally changed, but just the indexes came in.
Just the inflow.
And so if you're a junior company, there's no index weightings whatsoever.
And institutions seem to be standing by too.
Yeah, well, again, no one's paying attention.
Yeah.
The money flows. You look at the institutional money out of pension funds and that in Canada, it's been on the decline. Yeah. Australia, on the other side, they have what's called superannuation funds. And they've been deploying tons of capital into the mining sectors. They have more money invested in the lithium space than Canadian institutions have in Canadian mining companies overall, because they're focused on their domestic production to that. And they also don't have the distraction of U.S. equity markets being beside them. So they still have a very active audience of investors in that arena. I mean, my business practice, there's not a lot of us in Canada that manage wealth in metals and mining.
Right.
Very, very few of us. Whereas when, 15 years ago, everybody did it. So that's my competitive advantage.
Is this the worst you've seen it?
No. But it's worse in terms of value. Okay. I've never seen such great companies with great value get so unloved. Yeah. And, so from a value proposition, selectively, there's some phenomenal values out there. Could it get worse? I mean, you never say never in this business, right?
Yeah, exactly.
But again, as long as you're buying great assets, great management teams that have a game plan and they're capitalized to grow their assets, then you can weather those storms.
Yeah. Buyer's market, that's for certain.
It is a buyer's market.
Yeah.
And again, eventually, a year from now, hopefully you'll have me here, and all of a sudden the exploration game is ignited because of a discovery somewhere, or people realizing there's no projects coming down the pipeline. I mean, I can count on one hand the projects coming down the pipeline into production.
It's pretty wild.
And yeah, you have to replace how many ounces mined a year?
Yeah. But the disconnect between understanding that and the fundamentals is just not...
Well, gold buyers are gold buyers. Equity buyers are equity buyers.
Right.
And the equity buyers aren't even paying attention to the fact that gold's where it is right now. And the other thing too, just to finish off on the sentiment of investors, independent brokerage firm in the United States, they provide services for professional traders. The number one trading instrument for American investors on that platform today are buying call and put options on ETFs on a daily basis. So that's where the trading mentality of speculation's gone to. We used to have speculators in the mining space in Canada. We have a culture of investors. And once they start seeing returns, they'll come back in, right?
Yeah, of course.
But it's amazing how that investors
They're
disappear.
just waiting for that initial jump and then hopefully start piling in.
Yeah,
that's the goal.
Yeah. But again, I think you get some great discoveries, and there's a number of great discoveries that are looking very exciting.
Absolutely.
And so this is a great platform and an event to actually come explore some of these companies and educate yourself too.
Yeah, and for a lot, the future is looking friendly and hopefully bright as well.
Yes, it
All right,
will.
Cam Currie from Canaccord joining us. Thanks again for being
Thank you
on the
very
show.
much. Appreciate it.
Thank you for tuning in. I'm Jeremy Szafron, and you can catch more coverage at the Vancouver Resource Investment Conference by signing on to our YouTube channel and subscribing. We'll see you next time.
Kitco News special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.